Well, clearly we do have, we're very focused on inflation. It is obviously too high right now. We want to make sure inflation comes back down to our 2% longer run goal. So that is clearly our area of focus. Now, the decision to accelerate the taper and bring that to a close in mid-March makes complete sense, ending that part of our program to add accommodation. In terms of the timing, we like to do things in a way that's, very carefully studied, very carefully communicated, and do our policy changes without creating disruption in markets. So yes, we are ending the program pretty soon. It'll be done in mid-March, based on how we see it now, and I think that's exactly the right thing to do. I don't see there's any real benefit to try to speed it up further, so I don't really think it's really about getting our monetary policy stance in a good position, and also obviously creating the optionality at some point next year, likely, to actually start raising the federal funds target range.
Yeah, thanks for that. Walk us through what happens at the end of the taper. How quickly do you think the Federal Reserve needs to reverse course on policy and start to raise rates?
Well, you're not going to be surprised what I'm going to say. It's going to depend on the data. The decisions that we've made both in November and our meeting this week were really driven by economic developments, what we've seen in the labor market, what we've seen in inflation, and how the outlook has evolved. And so when I think of next year, clearly that's where I'm going to be focused. I'm pretty optimistic that we're seeing really strong improvements in the labor market. You've seen the unemployment rate come down quickly. I apparently, my colleagues, based on our economic projections, expect the unemployment rate to come down to about 3.5% by the end of next year. Expect, growth to be well above trend. And I do expect inflation to come down somewhat, but still be above our 2% target. So I'm going to be looking at all that data, analyzing where the economy is in terms of our progress towards our goals, and how do we get the right stance of policy. I go into next year feeling, the baseline outlook is a very good one in that regard, and therefore, actually raising interest rates would be a sign of a positive development in terms of where we are in the economic cycle. But it's going to be driven by the data.